and large, when you're paying 70 times earnings for anything, you're expecting a very significant amount of upside and very fast growth. So the stock was very clearly priced for perfection. And this is really due to the phenomena that was the move last quarter. So as most people know, SoftBank actually still owns 90% of ARM, leaving only 10% of the float to be publicly traded. And with a couple of other sticky shareholders, it's even less than that. So when they posted a beat last quarter, really due to scarcity value, just the fact that there's not so much AI large cap exposure out there, majority retail really drove that stock way higher than it should have been to an astronomical valuation multiple just to get the exposure. Now, coming into this print, it was time for the rubber to really meet the road. And these numbers needed to be perfect for them to be able to justify that valuation. We like the Q4 numbers driven by the V9 architecture market share gains. The business is definitely doing well. Q1 guidance was fine also. But then for them to guide below the street, slightly below consensus at the midpoint for the full year 2025, the valuation is just not forgiving for that. But by and large, that might probably is somewhat of a conservative guide. So if they're able to come out next quarter and raise that and ultimately beat it, that would be good for the stock later on. But for right now, we expect this profit taking to commence.
After a strong earnings report on Wednesday, accompanied with a weak forecast for the full fiscal year, the British chip designer ARM, which licenses its chip designs and earns funds through royalties, decided to enter a brand new market. ARM is expanding into the data center market, where it's looking to build its own chips and launch them sometime next year. This would allow the company to power new AI models and reduce reliance on the GPU market leader and dominant supplier, Nvidia. This is an extremely bold move, attempting to take on the market leader while other Nvidia competitors, like AMD and Intel, are still struggling to gain market share against the giant. But ARM seems insistent on building its own chips, and this move is part of Masayoshi Son's, the CEO of SoftBank Group, $64 billion bet to transform the group into a sprawling AI powerhouse. So, in today's video, we will talk about how this would benefit ARM and whether it could be a threat to Nvidia's dominance in the future. But before we do that, if you want to keep up with ARM's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video. UK-based ARM will set up an AI chip division, which will aim to build a prototype by the spring of 2025, and the mass production for this prototype, which is to be handled by contract manufacturers, will be expected to start in the fall of that year. SoftBank is already negotiating with Taiwan Semiconductor Manufacturing Corporation, which also happens to be Nvidia's main supplier, looking to secure production capacity. Moreover, ARM, in which SoftBank owns a 90% stake, will handle initial development costs, which are expected to reach hundreds of billions of yen, with SoftBank also contributing. Also, there's a possibility that once a mass production system is established, the AI chip business could be spun off and placed under SoftBank as they aim to expand to data centers, robots, and power generation under Son's AI revolution vision. He also envisions bringing together the latest AI, semiconductor, and robotics technologies to spur innovation in various industries, with AI chips that can process large volumes of data at the core of that project. As a result, he traveled across the world to realize that vision. He visited chip hubs in Taiwan and the US, and also met with executives of companies expected to cooperate with SoftBank's initiative. Moreover, he has set sights on artificial general intelligence, or AGI, which is expected to assist humans in many different areas like shipping, pharmaceuticals, finance, manufacturing, and logistics. Many investors know that the market for AI chips is expected to see accelerated growth, and this claim can be backed up by numbers, as this market is estimated to be worth $30 billion this year, and it is expected to exceed $100 billion in 2029 and top $200 billion in 2032, according to Precedence Research of Canada. Nvidia currently leads the field, but with the massive demand for its AI chips, it's sometimes unable to keep up with the growing demand, and its chips are almost always sold out, according to people in the industry. So there's an opportunity for other chip companies, and SoftBank clearly sees that. And it's not like ARM is a completely new player in the sector. In fact, the company already supplies circuit designs called architecture to Nvidia and other chip developers. On top of that, ARM holds an over 90% share in architecture for processors used in smartphones. So, the company has already established itself in a position of continuous growth moving forward, and this is what ARM's CEO confirmed in a recent interview. So let's hear what he had to say. Hello everyone, and welcome back to Investocracy.
All right, let's talk 26-27, because that's something that's going to elude many people today, and to their own chagrin, I think, later on. You are going to be the partner. We actually heard it yesterday again with Jensen Huang from Nvidia. You're going to be the partner in all these data centers. You're the CPU to go with this GPU. I also think that you're going to dominate cell phones, and I think it's also possible that you may dominate PCs. So is there an area you won't be dominating by 26-27?
I got to be careful using the word dominate. I think we're in an incredibly strong position going forward, Jim. If you just look at the fundamentals in terms of what's driving the growth in our industry, it's really all about compute capacity, AI adding that need. And because ARM is the largest installed base in the planet, across the tiniest of edge sensors to the most complex device, like you mentioned, Grace Blackwell, ARM is everywhere. And going forward to do more and more AI, you have to run it on ARM. There's really no other alternative going forward. And then when you layer on top of that, the thing that we're really good at, which is power efficiency, that is so critical when you think about the growth of these AI data centers, which require increasingly amount of power to deliver these magic type of outcomes that we're all hoping and expecting.
As you heard from the CEO, ARM is the company who already provides the architecture to Nvidia's Blackwell chips, which could mean that ARM will be capable of producing chips that are similar to Blackwell, and this could pose a potential threat to Nvidia's dominance in AI chip manufacturing, especially since Nvidia itself said that Blackwell will be the most powerful chip for AI. Moreover, ARM's CEO Rene Haas said during the recent earnings call, from cloud to edge, all AI software models, from GPT to Llama, rely and run on the ARM compute platform, adding that as these models become larger and smarter, their requirements for more compute with greater power efficiency can only be realized through ARM. With that being said, ARM's existence as a company is essential for all these tech giants, as it is the main supplier of the technology required to run these sophisticated AI software models. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Oliver, I do actually have the ARM numbers if you want me to go through a couple of them right now.
Let's do it.
Kind of interest. Sure. So the adjusted earnings per share for ARM came in at 36 cents. Street was looking for around 30 cents, so they did beat on the bottom line. And then the top line revenue came in at $928 million versus the Street's estimate of 875. So they smashed the top line number here. They were looking for their guidance for Q1 revenue to come in at 875 million to 925 million. Street was looking for 857.5. So they did beat the guidance moving forward for revenue. And the adjusted earnings per share estimate for their guide for Q1 is 32 cents to 36 cents. Street was looking for 31 cents. So they beat pretty much on every single metric here. I think right now we probably just have to digest it a little bit and also understand too, this stock was trading at a pretty hefty premium, to say the least. But when you're looking at their guidance, just overall, they actually look pretty decent, and they actually have continued conversations or content around the AI driving space, continuing to see increased demand there for their technology across all end markets. And they are saying that there is now expanded support for generative AI systems pretty much across all devices, which they do service. So I think this is actually a pretty decent report, kind of a buy the rumor, sell the news type of an event. Nothing out of the ordinary. And when you're looking at their guidance, I mean, they smashed the Street's expectations from what I see.
Yeah, and I don't think that folks thought they were going to be able to pull that off again, to be able to beat at that level, especially with some of the limitations for Taiwan Semi that we saw from that company, and just the question about how well handsets were going to perform and the more mobile linked businesses that they supply to. So, I mean, this could also be kind of read as a good message generally about kind of some of the cyclical demand for this stuff. But of course, ARM is going to portray it as very, cutting edge, Caroline, that it's all AI and it's robotics and autos too. That's obviously going to be able to filter in, I think, to our AI theme. And we don't have anything else this week for AI, so I don't know. I mean, if the market decides it likes this and rallies ARM, it could be a big deal for the week.
When ARM released their quarterly earnings, the stock dipped thanks to weak guidance, but it recovered and now trades at around $108. And if you look at the average price target Wall Street has for the stock, you'd see that it's $112, representing around a 3% upside from where the stock is currently trading. Analysts also expect ARM to grow by 20% on average from fiscal 2025 to 2027, but growing top and bottom line by 20% year over year consistently is a very hard thing to achieve. But given how dominant ARM is in the field and how there's still a lot of potential for AI growth, ARM could really grow at these rates. Of course, investors are skeptical in the short term, thanks to the disappointing guidance that missed analysts' expectations. But there's a lot going on for ARM that could translate into a better future for the company. For instance, the company said that growth will be driven by its unique ecosystem of software and design partners, and ARM currently has the world's largest compute ecosystem with more than 18 million software developers. In addition, ARM and Intel Foundry Services announced a multi-generational collaboration to enable chip designers to develop advanced ARM-based SoCs to be manufactured at Intel Foundry, initially for mobile and data centers and potentially for automotive applications. This is great news for investors, as the mobile and data center markets are great, but the automotive industry is something else. This is an industry that's expected to reach $3.9 trillion by 2030, so there's a lot of opportunities for ARM there. Also, the company said that cloud service providers like Microsoft are continuing to shift to ARM-based chips, and we've seen when these companies reported earnings that they plan to keep spending on chips from different companies like ARM, Nvidia, and AMD, even though some of them make their own chips, which indicates the strong demand that's not expected to slow down anytime soon. ARM is still collecting royalties on products developed in the 1990s, and when you take a look at the markets that the company is in, you'd see that it keeps gaining market share, and that the value of these markets has been increasing over time. And the company is also highly profitable, with a gross profit margin of 97.2% and an operating profit margin of 42.1% this quarter.
And Rolf, ARM, is moving into new markets, but when you think ARM, you think smartphones. What is your outlook, I guess, Rolf, for smartphones this year and what it means for ARM's business?
Yeah, it's an interesting question because you're right. Smartphones is around 45% of their royalty business. Now, smartphones, we think, it's recovering, but only slightly. It's really lukewarm, so low single-digit unit growth. But for ARM, because they are in the midst of an architectural change of their V8 to V9 architecture, and they only do that once every 10 years or so, customers such as Apple, Qualcomm, MediaTek are going to pay a lot more to use ARM's IP. So smartphones only growing low single digits for the market as a whole for units, but for ARM, revenues can grow up to 30% this year for smartphones specifically. On top of that, they have another number of growth drivers such as cloud, which is really working in ARM's favor. So what you get down to is revenue growth for the year that can quite easily be north of 20%, but that's fully reflected in expectations as they stand already.
As you look around the chip industry right now, Rolf, is that kind of broadly true of chip stocks, that they sort of reflect the outlook, or are there places where you can look that haven't caught up with the fundamentals?
Yeah, we've seen a real bifurcation in terms of valuation, with companies exposed to AI doing very well and some of the companies exposed to autos and industrials, on the other hand, not performing that well. These companies such as ON, NXP, Infineon, ST Micro. So we think that there is still value, absolutely, in that latter category. When it comes to chips that are more exposed to AI, etc., such as Nvidia, AMD, Intel, what becomes the bigger question at this point is not so much what is going to happen in 2024 or even 2025, where visibility is quite high, But what is going to happen with that market beyond? So in 2026, and there it's really still a big question mark. And increasingly, the market is going to think about going to view that lack of visibility as a potential source of risk. So in terms of positioning, perhaps the more low risk exposure is towards automotive and industrials at this point in time.
Rolf, do you consider ARM a smart AI play?
To some degree, they are, yes. So they have that data center business that I mentioned. Importantly, it is not GPUs that you've been hearing a lot about. It is not specialized chips like Google's TPU. It's CPUs, which is a business that has been under a lot of pressure over the last few years. Now, ARM is taking share in that market. So they are taking share from AMD, from Intel. So they are a very fast grower in a market that is under secular pressure because of that increased use of GPUs in the data center. So they are an AI play in that sense. More importantly, what is really ARM's domain is everything that happens on the edge. So this is smartphones, IoT, etc. There, ARM almost has a monopoly on high-end processors. And as we see AI move towards the edge, so more of your compute being done on the smartphone rather than on the data center, ARM should be a big beneficiary of that trend of having more powerful chips in your smartphone. And that is a big driver for ARM in the coming years, yes.
If ARM can continue to grow its market share in rapidly growing markets, then it has a strong growth potential in the long term. And if you're wondering whether to buy ARM shares right now or not, you might want to wait until Nvidia reports earnings next week, because this will be the make or event for the entire semiconductor and AI markets. Some might say that ARM stock is a bit overvalued right now, but given the company's dominant position in the market, the premium could be justified, just like how Nvidia's premium is. So the focus should be on how the business performs, and ARM continues to grow at a high rate. But what do you think about ARM stock? And what are your expectations for ARM's future? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for ARM is. If you would like to know more about the latest updates about companies like ARM, then go ahead and click on the next video on your screen.